Hi, welcome back to Agent Insider. I'm your host, Andy Jewell. Thank you for joining us today. Today, I have a guest with me, Steve Mitchell from the Ryan Turner Specialty. We call it RT Specialty, Office President, COO. Steve, thank you for joining me today and welcome to our show.
Appreciate you being here. Hello, everybody. Just a little disclaimer at the beginning. I do work for RT Specialty, but anything I say today is from the beautiful mind of Steve Mitchell and not something that RT is necessarily telling me to say. So I just gotta satisfy the lawyers.
That's right. Legal. Hey, that was actually really smooth for like a disclaimer to satisfy lawyers. That's like just from the beautiful mind of Steve Mitchell. Lawyers get involved and then everything gets super confusing, right?
That's right.
Yeah. Well, it's great. We can just have a conversation.
Thanks for having me. Yep.
Two insurance guys together. You've been in insurance for a long time. Mm-hmm. You started 28 years ago.
It'll be 28 years ago at the end of this month, which is hard to believe. Yeah.
That's awesome. Congratulations. You must enjoy it somewhat.
I do. Yeah. I would say, I wish there's a little Will Ferrell skit. I don't know if you've seen it, but he's accepting this award and he's talking about, when I was 10 years old, I dreamt about inland marine insurance and boiler and all this stuff. It's pretty. So I did not have that path. I kind of fell into it, but it's been a good ride.
He's actually accepting an award as an insurance?
No, so he's accepting I forget what it's like the it's in New York. It's an award thing, and he's getting some lifetime achievement deal. Yeah. And he starts off by saying, basically, if it wasn't for this failed dream of going into insurance, I wouldn't have made it into this place.
That's
of being
funny.
This, comedian.
I'm gonna have to look that one up.
Yeah, it's pretty funny.
That's pretty funny. Yeah, insurance isn't something people usually dream about going into.
No.
That's when I was young. I never told anybody I want to be an insurance agent when I grow up.
Exactly.
But it's pretty cool when you're in it, right?
I think it's overlooked as a place to go. I think. And I'm sure we'll get into this later, but I really think that it's a place where if you have any sort of drive, it's not that hard to stand out, right? And it's not that hard to really be successful in it.
Yeah.
Especially these next 5 years. And, just as far as the demographic change, so many people are retiring. And I think people that really get this and understand the opportunity and go for it in the next 5 years, they're going to make the next 20 amazing, right? So the average age is like in the mid to high 50s, I think, for insurance professionals. So a lot of people getting out of it in the next 5 to 10.
Yeah. I agree. I think we will talk more about transitioning and what's happening in the insurance industry as a whole. You have kind of a wide range of experience over those 28 years. Tell me a little bit about what got you into insurance and where your path took you.
So I wanted to be an investment banker. And in my mind, I was never going to move to New York or whatever, but in my mind, I was going to be this high-powered investment banker and have a flat near Wall Street or whatever. I was obviously never, ever going to do that. I was a kid from a small town, Western Washington. And I had applied to all these firms. And my father-in-law, who's an insurance agent, at the time, he wasn't my father-in-law, but I was dating his daughter. And he said, "Why don't you think about insurance?" And so he hooked me up with a handful of carriers that were local. I applied. My first job offer was at Travelers. I took the job, and sort of the rest is history. But that's how I got into it.
So did you started out, were you in claims or underwriting?
I was in claims, yeah. Okay. So I was in claims. I did that for 2 years. And I remember about 6 months in, it's a tough gig, right? Mm-hmm. I loved it as far as looking back on it, because you get to learn how to deal with people that are not happy a lot of times because they're going through a lot. They've lost something. So that's why they've put in a claim. But we had at Travelers, it was the 8th and 9th floor. I tell the story all the time. I sat in my cube and I could look up and there was a stairwell that connected the 2 floors. And once a week, twice a week, it was like the heavens parted and this beautiful, happy person would come down the stairs to ask this haggard claims team a question, right? And so one day I just had enough and I just pushed back from my desk and I just marched up the stairwell and went into the guy's office that kind of led it all and just said, listen, I'm Steve Mitchell. I sit down in claims. You probably don't know who I am. I am interested in being up here. So it took about 18 months. There was a few different opportunities that came up, but finally got into underwriting, and I did that for a while. And then I spent a little bit of time on the retail side as well. And then was called over to the ENS side, which is where I am now. One of my longtime mentors was in the role that I took over eventually.
Okay.
So yeah, no, it's been a good mix of kind of different disciplines and different areas, but yeah.
It gives you like a broad view of how the insurance industry works.
Yeah.
ENS, just in case anyone doesn't know, ENS is going to be excess surplus lines.
Yeah.
So you have like the admitted carriers, which would be like Travelers, Farmers, State Farm, Allstate, Liberty, lots of admitted carriers. And then the not admitted or excess surplus lines should be the higher risk carriers, carriers that do higher risk types of insurance.
Yes. So my father-in-law owned an agency and he was commercial. He had personal in the shop as well, but he specifically handled commercial business. And he told me at one point, if it was ENS, I just turned it away. I didn't want to deal with it. It was just something that was going to be bothersome to me. But at that point in time, when he was doing that, ENS was probably, especially when he was doing it, it was probably low single digit, 3 to 5% of the commercial U.S. marketplace. Now it's depending on how you count it. If you're counting programs and other things, it's 25 to 30% of the commercial U.S. marketplace. So it's grown tremendously. So if you had that attitude of like, if it's ENS, I'm not going to touch it, you're probably not writing a lot of business and being successful, because it also is, you have a client, you probably know this, maybe one part of their business is ENS. And if you say, nope, I'm not going to help you with that, they're going to go down the street to another agent that will, and then they're going to take all the admitted stuff that you have access to and write. So it's become a pretty interesting part of the marketplace.
Yeah, it is. That's a huge percentage. You think about that 30%.
Yeah, it's massive. Yeah,
of the marketplace being in ENS, and it doesn't seem to be shrinking. It definitely still seems to be growing.
No, yeah. When I started in it in 2018, I want to say it was like 11 or 13%. I forget. And now again, it's like 25 to 30. Right. So that's just in a short 7 years, it's basically doubled.
Yeah, that's crazy. So, because that was one of the questions I was going to ask you, like over the last 10 years, last decade, what have you seen? So obviously one of the big differences is we're seeing a growth in that ENS space. What are some of the trends that you see that have been pushing that, and trends in the industry that you've really noticed in the last 10 years?
Yeah, I probably won't touch on all of them, and I'm certainly not an expert on everything, but obviously technology has been a huge impact, and that's more than the last 10 years. You think about just the world getting riskier, whether it's cyber, weather, geopolitical stuff as well. There's definitely been a shift. Then you think about all the consolidation. So retailers consolidating, carriers consolidating, wholesalers consolidating. There's a ton of consolidation that's happening, which, I think, some might say, well, where does that leave the smaller retail shop? I think there's still a massive opportunity as these retailers are getting gobbled up. I think the winners are the ones that can stay creative and serve well. And I don't think you have to be part of some big conglomerate. I think it's okay to be a smaller agency. And I think there's a space for that. And I think that applies in really every part of the industry. But as far as ENS, because that's the world I'm in, it's grown tremendously. We always say ENS is sort of the place for three things. It's the temporarily sick account, right? So maybe there's a loss situation, or it has a bad roof, or something that can be rectified and eventually maybe it gets back to admitted, or the permanently sick. So we write a bunch of underground storage tanks in the state of Washington. We probably do 75, 80% of them. That is something that's eventually all these tanks will get replaced, or everybody will go EV or whatever. But that's a permanently sick situation where that business will likely be an ENS
for as long as it's around.
For as long as it's around, right? And then there's the new, so the innovation, right? So at one point it was the EPLI or cyber's kind of straddling the line. Some of it's admitted now, but a lot of it started really on the ENS side. So if you think about the world getting riskier, new things out there. So things like, just to name a few, AI. I don't know what new risks really are going to come out of that, right? Or self-driving cars. Maybe the shift becomes, it's less of a auto liability situation and almost more of a product liability situation. So there's a lot of shift and change in the world, and going all the way back to Lloyd's of London days, which we do business with them, and insuring ships versus now thinking about AI and self-driving and all these other random stuff that who knows what's next, right?
Yeah, that's a good point. Is like, I think a lot of people don't think about that with ENS, is that it is actually the space where innovation happens.
Yep.
Because the admitted carriers, the tried and true, new construction apartment buildings, once they've been completed and they have, 80% occupancy, every admitted carrier out there is probably lined up to be willing to take a crack at that. Yeah. But when you start to go, okay, well, we're going to do something new that involves AI as a business model, everyone kind of goes, well, we're going to wait and see.
Yeah. No, exactly. And I think it almost is this incubation place for new products, for these new risks. And then once it does become like, now we know it, we have the data, we understand, what the losses are going to be like, we can predict it, then the admitted players are going to come in. I think the other place, like maybe a misnomer, some people think of excess surplus lines as like, well, you don't want to go there. Those carriers are volatile, this, that, et cetera. ENS is actually, you can go look up the stats of it, but ENS actually has less, they call it impairments, less downgrades, less, companies going under than the admitted space. And one of the reasons for that is admitted is very regulated. Not that non-admitted's not, it's regulated differently, but it's very regulated when it comes to changing rates, changing forms, being able to pull out of states, et cetera. So they're not as nimble. So if something's going sideways from call it a risk, whatever it might be, whether it's, homeowners in California with the wildfires or whatever the case might be, ENS can respond quicker. The freedom of rate and form to actually make it so the company can actually be in business longer. They can move quicker than an admitted carrier. An admitted carrier is they're stuck. It's like they may have placed a bet on something, and then all of a sudden it's turned sideways or downwards. They're losing money, but they can't move fast enough sometimes to get out of that situation. So there's a lot of stability actually in the ENS space, which I think some people think of it as like it's the wild, wild west or whatever.
Right. No, well, it feels that way, right? Because it's carriers that you're not familiar with, right? Like if you talk to customers, they're not necessarily familiar.
Everyone knows Travelers, Geico, they know all the big names.
We don't know James. They don't know James River and Kinsell and Clear Blue and things like that. They're like, I don't know what that is, right? Like that sounds like something that somebody
Lloyd's
made
of
up.
London, what in the world?
Right. Exactly. I don't want insurance in London. I want insurance here. I think there's an idea that these ENS carriers are scary. But to your point, like there's the admitted carriers are betting on what will happen, and then they play catch up onto what will actually happen. So the last couple of years, admitted carriers across the country, across the board, all admitted carriers have been struggling with profitability problems. And as a result, they've been tightening underwriting guidelines. So they're non-renewing things. They're no longer writing stuff that they used to write. They put, the timeline, the age of buildings is a huge deal now in the commercial world. But even in the personal lines, like number of accidents they've had, like
the social inflation with just lawsuits and the verdicts, the nuclear verdicts they talk about.
Yep. All those things have had huge impacts. And as a result, they've lost a ton of money and they're playing catch up. So the rates that they're changing today and the underwriting guidelines that they're putting in place today are actually responding to something that happened 12 months ago.
Yeah. Yeah. And I think the other thing, we've already seen it, and I think we'll see more of it, is admitted carriers actually purchasing non-admitted carriers. And my view of it, I've not talked to these executives that have done this, but my view of that is they're doing that because they want to write business, they want to write it profitably, but the vehicle that they currently have as an admitted carrier, they're not able to do it. So now they're looking over the fence and saying that's growing much faster than we're growing. It's more stable than us. I want in on that. So they'll go buy that so that they can still play in this new kind of ENS space that they weren't playing in before.
Yeah. And a lot of carriers have done that.
Yeah.
Then they have two models of their ENS and their admitted. Well, one of the things I was thinking was interesting as we're talking about all of this volatility inside of insurance is a lot of people view insurance companies as these big evil companies, right? Like you're just there. I had a friend call me. He's not one of my customers because he lives in the Midwest. He called me just this morning. He's like, "Hey, are termites covered?" And I was like, "Termites aren't going to be covered on your home insurance." He's like, "What about rot?" I was like, "Rot's not going to be covered on your insurance." Stinking insurance companies never pay out anything. I was like, "Yeah, if your house burns down, it'll be fine though,
yeah,
right?"
Right.
So like that concept is there that insurance companies are just not going to cover anything. They're just they're just taking your money.
Yeah.
But realistically, you mentioned Lloyd's of London going back to ships, right? Like, how do you see how the role that insurance companies play in economic stability?
Yeah. I think that's a really good question. I think back to your point of the termites and the rot. And like insurance is not there to basically replace your responsibility in maintaining your property. Like that's not what insurance is.
Mm-hmm.
You gotta make sure you take care of that stuff. It's there for the sudden and accidental, the things that the risks that stuff happens, right? And to protect your assets and to allow you to trade, to be in business, because if I'm trading with you, I don't want to do a contract with you if I don't know that you have the stability that you're going to be around for a long time. And one of the ways that we do that is to say, hey, give me a certificate of insurance so I know that you're protected for something that might go wrong, or that I know you're probably going to be in business if your building burns down, whatever business might be. I think about this. There's a restaurant not too far from our house. It's down in like the Mill Creek. I think it's probably technically in Everett, but it's Mill Creek area. It burned down twice. And it's still a going concern. Like it's still in business.
Right.
It would not be in business after the first fire.
Yep.
Let alone the second fire. Maybe the guy's got deep pockets and he could rebuild. But is he going to be able to rebuild twice? Probably not. It's in business because it has insurance, right? So I'm a big insurance nerd or whatever because I'm in the business, and I think there's, this probably overstates it, but I think there's actually sort of this noble, virtuous thing that we're doing. It's what keeps the world going around. It allows someone to buy a home. And if you don't have insurance, you're probably not going to buy a home. You think a bank's going to loan you $1 million for a loan to buy this big, beautiful home? Probably not, right? Yeah. Unless they know you've got a piece of paper that says, if this thing burns to the ground, my loan's going to be okay. I'm going to be able to get repaid. So I think that's, at the core of it.
Yeah, I tell people often, I was like, insurance really is what allows you to have a first world country.
Yeah, I think that's a good way to put it. Yeah.
Because to your point, right? Like if your house burns down, like even if you go, hey, we're just going to save up, we're going to buy a piece of property, and then we're going to build a house in cash as we go. We never use a loan. And so I've built this house. It's like, okay, great. And then it burns down, right? And then like to your point, like, do you have the deep pockets to build it again? Like there's probably a few people that do, but most people are not going to be able to afford to rebuild a house when it burns down, or you get in a car accident. Not only do you lose your car, but now you're being sued because the other guy can't work. And now are you going to be able to provide for the other guy's family as well as your own family because it was your fault? Those are the things you can work your whole life to build your life and your lifestyle and financial security for your family in one event.
Seconds.
Yep. Just split second. That's what insurance does, right? Like that's what insurance, the whole concept of insurance is to protect you from that moment.
I think about, we do commercial, but we also do probably 20-25% of our business is personal lines. And a lot of times when we're talking about the businesses and are they going to be able to maintain and keep going and cover the losses or what have you. But back to even that demographic thing we talked about, there are, I forget the stat, but I remember this is probably 5 years ago. They said over the next 15 years, 10,000 people per day are going to retire.
Wow.
That's an insane number, right?
Yeah.
But that's the math, right? And a lot of people, they have a net worth, a retirement nest egg, whatever that is. Sometimes they own a small apartment building. Sometimes it's their 401k, the cash they have, et cetera. But they're saving to be able to retire. And in an instant, if you're not protecting something that what you've built, and a lot of times from a personalized standpoint, that might be your house.
Right.
It might be the apartment building that you built with your buddies. If you don't have coverage for that, it might be, I own a 12-unit apartment building and someone tripped down the stairs and broke their neck because there was, something wrong with the edge of the step. If you don't have a umbrella policy to take care of that, if you don't have, let's say there's a massive earthquake, and sadly for a lot of people, they really don't have enough to retire on.
Yeah.
But some that do, I forget the exact stat, but a big percentage of their nest egg and what they're going to retire on is their home, right? So especially in Western Washington, you've got all these homes and the home values are increasing. And let's say your net worth is $1 million to $2 million. It's possible that half or over half of it is in the equity in your house.
Yeah.
And so if you don't have that protected correctly, whether it's from a fire, which most people have, or let's say, God forbid, there's a massive, not talking about like 5.8 earthquake, but let's say there's the 9.3 and the thing comes off the foundation. You were planning to retire next year and you just had enough. Like you didn't have margin to have to cover $300,000, $400,000, $500,000 for an earthquake loss. Like that's a big deal, but people don't, back to your kind of point, people don't think about it that way. They think about it as, they all have a story of the termites weren't covered. So what a terrible
What do I pay all this insurance for anyways?
Yeah, exactly. Exactly.
Yep. No, and that's true. Like the earthquake, I think like there's things you can control, right? Is like you can control how you drive. You can do rest control and things like that. Earthquake's something you can't control. Yeah. It's going to happen.
Yeah.
They say the geologists say, hey, we're overdue for the big one. And what that means is it should have happened in the last 100 years or it will happen in the next 100 years. So we really don't know.
Right.
At some point it's going to happen and it's going to be a significant and massive impact to
It'll
property
change
damage.
some people's lives, like in a big
sure.
way.
Yeah, for sure. And so, but how many people carry earthquake insurance?
I heard it was 20% in Western Washington. I don't think it's that high.
Yeah, I don't think so either.
I don't think it's that high. I carry it, and I know some people say, well, the deductible is too high. Well, again, if your margin, I just think about this, the context of retirement. I have a whole nother story if we can get into it, but maybe not. People don't plan for it. And if you have zero margin, like I want to retire in 2027, and you barely have enough to do it, you have a loss, and it's a big loss, you're going to lose it. So even though the deductible might be high, and there are some products out there for deductible buy down for earthquake that are coming out, which I think that's pretty interesting. But if you think about, hey, I've got $1 million in equity, and I could spend over the next 2 years, because my plan is to sell my home and move to Arizona and buy a cheaper house or wherever else, you can insure that $1 million of equity for a percentage of that $1 million. Right. It may not happen, but if it does, now your million, maybe it's 500,000 now because you have this damaged home that you've got to repair before you can sell it. I mean, it's...
Yeah, I was just thinking about it. Like people don't... When you talk about like your equity, right? And you think about like, I have $1 million sitting, I think people think I have my house sitting here, but
it's not like real, right?
Right. Yeah. But if I had $1 million, I would not just like, if I had $1 million in cash, I wouldn't just be like, oh, it'll be fine.
Let's leave it on the sidewalk.
Yeah, it'll just be here. Yeah, nothing will happen. You put it in a bank.
Yeah.
Right?
Yeah.
Like you want some security, you want safety around it. Yeah. And you understand that there might be some fees that the bank is going to charge you, but they're keeping your money safe for you.
And that's the downside. You might lose that fee.
Yeah.
But the upside is if something bad happens, I've lost that fee, but I've kept what I really am trying to protect.
Right. I kept the bulk of my money.
Yeah.
It didn't just
And I don't think
disappear.
people think that way.
No.
Even with liability, especially because liability is even more abstract, because they're not thinking, what if something happens and this is terrible to think about, but a school bus full of children, I run them off the road or something, I'm going to lose everything if I don't have some kind of protection from a liability standpoint with an umbrella, for instance. Or, I mentioned that if you own any sort of property and there's slip and falls, et cetera, people don't think, like, what can someone sue me for? Because it's not tangible, I guess. I don't know.
Yeah, it is interesting. People, and I think people tend to be optimistic, right? And I think
nothing's going to go wrong.
Yeah, nothing will ever happen. It's always going to be great, and everything's going to get better. And the curse of being in insurance for a long time. I've been 20 years. Is you start to look at everything as like, what can go wrong?
Oh my gosh, it's terrible. I've gotten better about it. I'd go out with my wife to dinner or whatever, and like, there's the steps and there's a rug with the things curled, and someone's gonna trip on that. They're gonna fall down the stairs. So I'm over there fixing it, or stuff like that. But yeah, you see the world differently.
You do, because you realize, although it doesn't happen often, the percentages are low.
Yeah.
It does happen. You see those claims come through.
Yeah.
Where somebody, you're trying to explain to someone like, hey, parking lot matters, because someone trips over an uneven part of your parking lot, they hit their head, they get a concussion, they get brain fissures, they get things where it's like, we're talking millions of dollars of damage to this person.
Yeah.
Because their life has been completely changed because in the court's eyes, you were negligent and didn't prevent a tripping hazard. So should they pick their feet up? Sure.
Yeah.
But legally, you're going to be on the hook.
Right. Exactly. And it's really, if it gets to that point, it's not even in the court, it's a jury. So now you've got the sympathy factor too. Mm-hmm. So depending on who the quote unquote victim is, whoever's been harmed, man, if it's a sad story, like, man, good luck. It's going to get bad for you.
Yeah. I had this happen. I was talking to a claims adjuster about one because my customer, the business, didn't feel like we should be liable and shouldn't be paying out.
Yeah.
And the adjuster is like, he's like, let's say I completely agree with the customer that they were not at fault at all.
Yeah.
He said there's enough ambiguity here. If it goes to court, we have the business owner and we have a single mom. Mm-hmm. He said, who do you think they're going to rule in the favor of? He's like, they don't even look. They look at the business owner and big bad insurance company. And they look at the poor single mom. He's like, we're going to lose every day.
Every time.
He's like, so unless it's a clear cut case, we can't fight it. And I think that's the reality, is like the sympathy factor. People don't realize, like, you put somebody who has a sad story in front of a jury, and you don't know.
Yeah.
It's a wild game, and who knows what that's going to end up as. And if you have assets and the other person doesn't, they look at that as you may not think of yourself as rich, but in comparison, you might be.
Yeah,
exactly. And then all of a sudden you're a target.
Yeah, that's right. And I think I'm sure you get this, you might be at a party or whatever, a wedding, and you meet some new people and everyone's like, what do you do for work? And when you say insurance, everyone's like,
quick, get me out of this conversation.
Yeah. Because no one wants to talk about this stuff, and they think you're going to try to sell them whole life insurance or something, or what, So
I know they all picture that scene from Groundhog Day where the guy's like, "Hey, I didn't talk to you about this whole life insurance policy." Yeah.
So,
yeah. It's not a sexy industry. It's not a exciting. But when you actually get into it, like, you start to realize those impacts of the stability that it creates in the economy, the protection that it allows people to build things up. I don't think it's possible to have a society that operates at a first world nation level without insurance.
I totally agree. And maybe it gets there, but it's a lot slower, because when things are going to happen, insurance allows things to keep going. And I'd say maybe it's not without skipping a beat. Maybe it skips a beat, but it keeps going.
It doesn't flatline.
Yeah, exactly.
It doesn't flatline, which is where Lloyd's of London started, right? It was because they're sharing the risk of, we got the merchants, and they knew they were going to lose a ship a year, and they didn't know whose ship it was. So they all pooled together, and because otherwise it gets to a point where you just say, I'm not going to venture anymore. I'm not going to risk this anymore because I could lose everything if my ship goes down. But if they go, hey, you only lose a tenth of the value of that ship because we're all going to chip in.
Right.
Then all of a sudden it's like, okay, I'm going to take risk and I'm going to grow. And I think that was actually part of what propelled the economy of the United Kingdom at the time.
Because new ventures aren't going to start unless there's some level of protection, right?
Right.
So who's going to take the risk to start something,
right?
If they don't have, there's always going to be other risks, I suppose, but this insurance is the vehicle to minimize a lot of the risk, right? So I agree.
So we talked a little bit in the beginning. You were talking about consolidation as one of the things that's been trending in the last 10 years or last decade.
Yeah.
You were part of a consolidation.
Yes.
What did you see that came out of that was a positive through consolidation?
Yeah, that's a great question. We were, in my opinion, a great boutique Northwest firm. We did have a national customer that was probably 30% of our business as well, but I viewed us as just a real nice boutique firm. And when we sold, we were 135 employees, had a real strong business. We were doubling every 5 years. And I think for us, what we discovered, kind of back to this whole idea of consolidation, that in our space, trying to get too much in the weeds, but in our space, larger brokerage business had consolidated already. So it was the top kind of 3 wholesalers. Certainly there was a lot of independent wholesalers out there. There still are, not as many as there used to be. But in the brokerage space, all the business, a lot of it is now in basically 3 of the top, national firms, our company being one of them. And in the binding space, so kind of the smaller commercial and then what I call light brokerage, so which in personal lines describes kind of what we were. That is starting to consolidate. That has been sort of distributed and continues to be across many independents, but now the big nationals are consolidating that business too. And so for us, as we saw the risk of our customers getting gobbled up so on the retail side, by a national firm, that was happening. That was a risk to us because now maybe they get purchased by maybe one of our best customers. This happens and has happened. Gets purchased by a national firm that Griffin, that's our old company, was not part of the preferred list. Mm-hmm. So maybe the national firm is dealing with these big 3 that I'm talking about, or 2 of the 3 or whatever it is. We weren't on the list, so now we almost can't even get in the door. Unless it's a niche product that national firm didn't have, like our tank program that we had, we'd still write that, or we write a ton of earthquakes, so maybe we'd still write the earthquake for that shop. That was kind of the exception, but we're not now on the list to write the other business that we write. So now we're losing that to others. So that consolidation was happening. We felt like it was actually riskier for us not sell and then to remain independent. So, I think that's a piece of it. Maybe it's mitigating the risk of that so that we can continue to grow. And then I think the other piece of it being part of a larger national, and I think we picked a really good one. Now we have access to a lot more market, more capability. There's some really cool things that we were trying to do, in an online rating platform, for instance. Our goal, we had built one for personal lines umbrella, personal lines quake. We wanted to do one for commercial business. We used to have one for contractors. It was difficult to maintain, but we wanted to create, sort of our goal, this, I think we punched above our weight when it came to this, honestly, for a small firm. Mm-hmm. But we wanted to create, hey, agent, here's a platform. You can punch in whatever the information for this risk, and it's going to return 4 quotes. That was a goal of ours. It would have taken us, 10 years to do it. We get purchased by RT, boom, they have it.
Yeah.
So it's just a much bigger organization, a lot more capability. And then back to that consolidation piece on the retail side. Now we weren't on that preferred list as Griffin. Now as RT, we are. So we can pretty much get into any shop that we want to get into. And then it just becomes the relationship game. Like we remove the barrier of you're not part of that big brand, that big company that's the preferred wholesaler. Now we are. So those are the things I'd say are the biggest benefits as for the company. And then just for employees, I think, we have some employees that are already doing significantly better because of some of the things we talked about from a financial standpoint for themselves and their teams. That's pretty fun to see, actually. So,
do you think that the consolidation is going to slow down, or do you think it's pretty much going to continue where it's at, or do you see it ramping up where you're going to see more and more consolidations?
I mean, you look at any industry, I'm sure you have commercial customers that have been gobbled up, and maybe they're an HVAC contractor, or maybe name any industry, right? There's a lot less of the independent, what drugstores, sporting goods stores, like whatever, name any industry, they're all getting gobbled up or pushed out because of the consolidation of these big companies. And it's kind of sad. I mean, I grew up in a small town, and it is a little sad to see it, and like all these businesses going out and then replaced by these big national brands. That's kind of what's happening in insurance. I don't see it slowing down. I think there will be moments where it's heavier and then it slows down. Like I'd say this last period, maybe it slowed a little bit because of the cost of money, et cetera. So some of the metrics around getting these deals done make it a little bit harder, but I don't see it slowing down because there's kind of a race to get as big as you can, as fast as you can. And there's this race towards efficiency and all these things and grabbing market share. And so I don't see it changing. I do think it still doesn't mean that someone that wants to go do it differently doesn't mean they can't do it. No, I think there's still a space for that. I think it is maybe a little more challenging, but I think someone can carve out their niche, whether it's because of the community they're in or the thing they're going after, the line of business, et cetera, or the way they do it. I think there's plenty of folks that can go out and make it work. And I'm specifically talking about the retail side. And I would say maybe on the wholesale side you could do it. I think it becomes really a lot more challenging. But from a customer-facing retail side, I still think someone can make it.
Yeah, I think they can for sure. I do think there's a challenge to that. I was just thinking while you were talking, in our county that I can think of off the top of my head, there's been 6 retailers, and some of them were large retail shops, which would be like an independent brokerage that has been bought up by a national brokerage in consolidation. And like 3 of them were huge, had been in the community for 100 years as an independent
I know the
broker.
ones you're talking about, yeah. And I thought they would never sell.
Right. They tried to recruit me, and then I was like, boy, I'm glad I didn't, because I would have just ended up out of a job or in a weird situation. But I understand why, right? Because some of the things you're talking about on a wholesale level, systems, a retailer, a smaller, or even a large one in your community is small in comparison to the national ones, right? So they go, hey, we get better systems immediately than what we can afford to buy on our own. We're getting appointments with companies that we didn't have appointments with. So now we can write business that we were not able to write before. And then, a succession planning issue of like, hey, the principal wants to retire, and he goes, I can get twice as much money if I sell it to a national brokerage than if I try to sell it to somebody local. And it's more guaranteed. Like, I'm not worried about, do they actually have the money? Right. I know they're good for it. So like, I understand like all those processes. It is kind of sad to your point, right? I was just thinking about it. Drugstores in our community here, there's one locally owned drugstore. And they've been successful in planning a succession to another, like an independent. The guy's retiring and he's selling it off, and it's kind of cool to see that. But it's very rare.
Very rare. And I think you said it. You have to have a plan. If you don't have a plan, you're gonna sell. I mean, that is the plan. And I think a lot of, for whatever reason, there's a bunch of different reasons probably, but a lot of these agency principals haven't planned. And if they haven't, then to your point, It's like, man, I'd love to sell it to you, Bob and Sue, but man, you can't guarantee me what these guys are guaranteeing me. You can't pay me what these guys are paying me over here. And I'm sorry, but I have to do this.
Right. I'm going to do, at the end of the day, they're going to do what's best for them and their family. And so, yeah, it is the lack of planning, I suppose, is a plan. It's a plan to sell.
Yeah.
And it is, there's positives to it, right? Like, cause it does give, like those customers in that space. We had an agent retire that we took over their book of business for them. And we brought in new opportunities, right? So in some aspects, just like, hey, they got consolidated into our agency, but now those customers have markets that they didn't have access to before. We have service levels that are higher than what the prior service levels were. So I think it's been an overall very positive impact to the customer base that was acquired by our agency. So I think there's a lot of positives. I think there's some drawbacks. There's some frustrations that I get, right? That customers go, well, now we don't have that same personal relationship with you that we had with the local owner, right? So it can be more difficult. And like, although you guys are doing a great job, you're here having a podcast with me, but like sometimes you can go, hey, like I don't have. Whereas it was a small wholesaler, I could call and I could talk to the people in charge. And now that it's a larger wholesaler, I'm like, I don't know who's in charge. I don't know who to call when I have a problem.
I actually am glad you brought that up, because I do think with acquisitions, even though there is a stat, like this whole like mergers and acquisitions. And I don't know where they come up with a successful versus not successful, but they say that it's like 80% of them fail or whatever. I don't know where that comes from, to be honest.
Oh, wow.
And that's like a general business, not insurance, but just generally. I don't know where that stat comes from, but what I just thinking about our experience going through it, and even you and I, just being transparent, had talked a little bit about this on the phone when we first chatted. It's a transition. You're talking about, trying to take what was and bring it into this bigger entity. And luckily, I think culturally speaking, it took a minute even for our employees to realize that actually all these new people we work with, they're a lot like you, because over time, RT has acquired a lot of us, if that makes sense. But there is this transition, whether it's systems, even though, maybe arguably the systems are better in some ways, in other ways, maybe they're not. And sometimes that's because it's new. Right. Sometimes it's because the data you get is a little slightly different. So it takes a minute to get everything into this new place where now, I'm not thinking about, well, that used to be that way or this or that. And then same with the customers, the experience is different, right? So I've talked to a lot of agents, and unfortunately for me in the role I'm in, by the time they get to me, a lot of times it is because there's some issue.
They're already mad.
They're a little bit upset, right? So that's my claims days comes back in, right? But ultimately, at the end of the day, we're still the same group, right? We have more capabilities, more to offer. But it doesn't mean there wasn't some sort of a transitional pain there, or some confusion, or or this perception of now they're RT and I can't get a hold of anybody. We're still the same people, So it takes a minute to get through all that. And I think, I'd be lying if I said it was like completely smooth the last 2 years and 8 months and 12 days.
Not keeping track.
It wasn't completely smooth, but I do think we are in a better place. And I think the future of what we will be in 5 years now is brighter than and it was good. What it would have been if we hadn't have sold. So I guess my point, just this idea that there's going to be some transition and whatnot in these consolidations, but ultimately, if you have good people and you make it through it.
Yeah, I agree. It comes down to the core of the people. Is it Marcus Lemonis? I think is had a TV show. Yeah, and it was like people, processes, and products. Yeah. Right, and the foundation is always the people, because he would go into struggling businesses. And he'd be like, okay, let's turn this around. And how can we take a business that's on the verge of going out of business and make it a successful business? Yeah. And that's really the foundation, is what are the people that you have in place? Because if you have good people, you can overcome product and processes. But if you don't have good people, even if you have great products and processes, you're going to be struggling.
100%. I didn't know that's where that came from, because I actually use that. And we kind of do an annual planning thing, which this last couple of years has been more about the transition. But one of the things I have this diagram of this tabletop, and it's the three legs are those, and then the tabletop is production or growth. And so if you don't have those three things, to your point, you're not going to have a great business.
Right. You can't be. It's the Prophet. That's the name of the TV show that he did.
Know that's where that came from. That's funny.
Yeah. It's really important, and I think we get super focused on one, right? Like people will get super focused because people matter. But if you only focus on the people that you have, and you can have awesome people, but if you don't ever address your product and process, then those people sooner or later, good people will leave.
They'll get frustrated.
Right. Because they're going to go, hey, you're offering a subpar product and a process that is painful to me, and you're not listening. So I'm going to go someplace else, and you will lose good people. And if you only focus on your product and your process and people are bad, it doesn't matter how great your product is. Nobody's going to experience it because they can't stand to deal with the process and the people. So like I know there's like that saying, like you can have something good, you can have something fast, or you can have something cheap, pick two, right? But I think when it comes to people, product, and process, I think you have to have all three.
I agree. Yeah, I totally agree.
You have to have them all running. So, what do you see, just kind of shift a little bit about the risk profiles in insurance? Like you mentioned, you kind of overarched there. You were talking about cyber and things like that. What do you see, like traditionally, like insurance, if you really look back at it, homeowners insurance was traditionally a fire exposure, which now with wildfire, it is actually back on the table. But like outside of wildfires, like there's not that many houses are burning down. It's a low percentage of claims is an actual burn down. So like, where do you see like the growth, or I say the growth of risk in businesses, or
things getting riskier is what you mean? Mm-hmm. Yeah. I mean, I think it's an interesting question. And again, I'm probably not going to touch on everything, but I think one of the biggest ones is probably, there's technology for sure, whether it's smart homes and everything that introduces, and because now you almost have, which I've seen it a little bit out there, but I maybe not broadly, maybe homeowners should be buying some kind of cyber insurance. Yeah. Or maybe I don't know. It's not really a space I'm that familiar with, but to me, there's some risk there, right? I don't know how big it is, but there's some risk around that. And maybe that melds into like ID theft or something, maybe. Yeah. But from our traditional products we're talking about, I don't know where it plays. And then we talked about the AI and the self-driving and, robots. And we didn't even talk about that. At some point, we're all going to have a robot running around, serving us or whatnot. And what happens when one, I don't know, drowns a kid or whatever in a bathtub? Isn't that terrible? Like the things we think about.
Right. Well, that's the insurance side of things. You go, like what are those risks? Like there is real risk associated with, like you look at that and you go, hey, like these are awesome technological advances, but there is also a risk to that. My son was telling me this, it's a trending thing, I guess, on social media now about, Mama didn't raise no clanker lover. And they're talking about that idea that clankers is like a slur against robots, because they're saying that, because they see the younger generation sees that already, that's where we're going, with the AI that we have, the technology that we have. We're quickly moving. I love my Roomba, because we don't have to think. We have a dog and a cat.
Now you got. Let's pretend I'm a droid or something. Like, how weird is that?
Right. Like you come home and dinner's made.
Which sounds kind of cool, actually.
Right? It does. And it's like, I'm behind that.
But what is that interaction going to be like, let alone the risk? But anyway, yeah.
Yeah, what happens when your droid burns down your neighbor's house on accident?
Yeah.
Right? Yeah. Even they have like they had the Roomba, now they have the lawnmowers that are out there mowing the robotic lawnmowers that mow the lawn. It's like, well, what's the risk? And right now, I know that they've done a lot of safety things with them, like auto shutoffs and things like that, so you pick them up. But you have spinning blades, even though they're small.
Yep.
If a toddler gets out there, gets hurt, there's a liability risk there. There are things that happen. Your neighbor's cat, your neighbor's dog, like there's things that you're going to be held responsible for that people don't think about.
Products.
Yeah.
Right. Yeah. Yeah. And again, is that a product claim? Probably. Or is it at some point going to become, it's a personal liability issue. Like maybe I didn't, I don't know, update the software.
Right.
The company said, well, hey, we put out a patch and you didn't upload it like you're supposed to. I don't know. But those are like things that are maybe that new incubation product thing that we were talking about earlier. Like how, and maybe it's not even a product, but it's a new endorsement or what have you, right? So there are those things. I think when you talk about spinning blades, I was thinking about like drone transportation for humans. Like that's another thing that's probably going to come. But again, those to me are like interesting kind of what once maybe was sci-fi or whatever is becoming reality. I think the two biggest things maybe that are top of mind as far as things getting riskier, maybe there's three. And one is around climate. So you're talking about the wildfire and just weather patterns changing, things like that. And you've seen like the sinkholes and all this weird stuff happening. But I think the other two that are maybe more kind of foundational to me would be things are getting older. Buildings are getting older. Homes are getting older. Plumbing systems, electrical, like things are just getting older. So as they get older, there is more and more risk of water damage, fires from electrical, et cetera. So I think just the age of things, like it's funny, like we see these guidelines now. It's like, we won't write anything up before 1990 or 1990.
Yeah, that's not that long ago.
But then you think about it like, oh my God, that's 35 years ago.
Yeah.
Right. So the other big one I think about is kind of back to this asset protection. So people are either earning and saving and their homes are getting more valuable. Their assets are growing, which means the more your assets grow, the more you have at risk, the more you need to protect. And I don't think people are thinking about that maybe as much as they should be. I was talking to another agent this past week about umbrella insurance. And his comment was, in his opinion, I don't think we're doing a great job of selling umbrella insurance. I've got a client who owns 12 properties and he didn't want to buy the umbrella insurance. I'm like, there's a risk there. Like not only from a liability standpoint, but also, on the property piece of it, that's a liability obviously, but on the property, are we insuring the increase in value of our assets properly? There's also, the inherited, increase in your wealth. Like, are people going to really be thinking about when they're, it's again sad, but when their parents go, that's a sad event. But now they're inheriting. I forget the number. You might know it, but it's like it starts with a T. It's like trillions of dollars are expected to transfer over the next 10 years or whatever. That's going to create risk for people that they didn't have before that they got to start thinking about. So I think those are two big areas, honestly. Again, I think maybe the biggest one is the stuff just getting older.
Yeah, and that's something that people don't really think about, to your point, right? Like, I remember it was like when it was like, oh, the last decade. Like, oh, that was actually 2000s. Like, well, no, the last decade now is actually the 2010s, right? Or... Yeah,
that's right. I had to think about that for a second.
Yeah. It's kind of crazy. I was thinking about that. We did a big remodel on our house, addition remodel, and I always thinking like, oh, it's pretty new. It's like, well, we finished it in 2008. So that was 17 years ago. Like, that's not new anymore. Yeah, and when I was doing that remodel in 2008, the house was only 28 years old. And so in comparison, right? Like,
yeah. I was thinking about this one too. Like I do this thing with my kids where I'm like, okay, when I was their age, my dad was that age, which is actually younger than me, and I thought my dad was an old man. Or this other one was, I remember growing up like listening to like 50s music.
Yeah.
I was born in 75, and so I just turned 50, which is God. But thinking about 50s, do the math on that. So for your kid that was born in 2011 and 2013, 1950s music to them is 1990s music.
Right.
If you think about
just the number of decades. Yeah.
I mean, that's kind of like.
Yeah, the oldies are the 90s.
That's my point. Like, it's kind of crazy to think about. Yeah. So the age of things, I think, is maybe one of the bigger ones.
Yeah, but it's never been cool, though. Like, you could drive around a 1955 Chevy Bel Air, and you're like, that's cool, right? Yeah. In the 90s,
I wonder if someday there will be, like, the 1991 Ford Escort.
Yeah, right? Like, I just don't see the 1991 Ford Taurus being like, wow, look at that, rolling up in that, right? Like, nobody's, that's still a curse.
But just the context of that, things are getting older.
Yeah. And the systems wear out. I think that's the other thing. Like, people don't think about that. Whether it's commercial or personal homes, a system was never made. No system is designed to last in perpetuity.
Yeah, some are actually designed not to last forever, right? It's, the way things are built now, right?
Yeah, well, for sure. There's definitely built-in obsolescence, engineered obsolescence. But you think about, like, whether it's your plumbing, your electrical, your HVAC, your roof, your siding, like, all of those things have a lifespan.
Yep.
Which I was telling you before, we got a lot of hate and response about actual cash value, depreciated value, but that's really where that comes from, is because, like, hey, if you don't maintain and change things over time, if you're not updating and replacing your wiring and plumbing and all that sort of stuff.
Because people don't think they need to do that. Because, like the roof, that makes sense. But the plumbing or the wiring, or, like, people don't.
Why would I replace
maybe
that?
They're buying a really old house, but again, a 1990 house is starting to get old, right? Yep. And I think about some of the new, at one point it was like the LP siding, right? And that failed pretty quickly. And that, everything's got hardy plank on it now, which I assume that's going to be good. I don't know. But is there a point in time when that's like, it's like chewing a piece of gum too long in your mouth, it dissolves. Like is it going to fail at some point? The other one I think about a lot, because I'm an insurance guy, but a lot of the plumbing in homes now is like that plastic.
Yeah, the PEX plumbing.
The PEX, like, is that going to last forever? I don't.
It's a plastic, right? Whether it's PEX or some other
brittle or something at some point and crack.
I mean, it is really cool. Like, we did our remodel in our house in 2008, and we did all new wiring, all new plumbing, all new drywall, roofing, siding. Like, the whole thing was gutted and redone, and we used the PEX.
Yeah.
And while we're in the middle of it,
make you not sleep at night. Sorry.
Yeah, no, it's okay. But
I don't know. I mean, I think it's in my house too. I don't know. Yeah.
Well, most any house built after 2000, it would be.
Yeah. So it would be. Yeah.
And because it's a lot easier, right? Like, they're not welding; they just run that through.
Yeah.
They cut it, split, and then they put the expander in. They put the joint in. It shrinks back down. It's crazy stuff. We watched. So after we did it, was in the middle of winter. Where we're still finishing, so we don't have heat in all of our spaces. And one of them froze, and it got like that big. It was huge. And I was like, oh no.
But it didn't burst.
It didn't burst. And I called the plumber, and I was like, because he was a friend of mine, I was like, hey, what do we do with this? He's like, it'll be fine. I'm like, no, it's like triple the size.
Is that one of the things with it?
Yeah. It just expands. It won't burst. And sure enough, when it thawed out, it just shrunk down. It had a little bit of water on the bottom underneath it, a little condensation, but it did not burst. And so so there's advantages to it.
Yeah.
But yeah, to your point,
there's a lifespan for everything.
What is it? Yeah, it's not going to last forever.
Yeah.
Whether that's, I don't know what the lifespan of it is. I don't know if it's 20 years and I only got 3 years left, or is it 50 years, or is it 100 years? But there is a lifespan. There's a point in time where it's going to fail because it wears out. Anything that's being used is going to wear out over time. You're going to replace the brakes on your car, right? You're going to replace the oil. Mm-hmm. At some point, you're going to rebuild the engine. You're going to rebuild the transmission. If a car runs for 100 years, it's had a lot of work done to it. And the buildings are the same way, and people don't realize that. So to your point, I think that is now insurance companies, I think, have been, which is why you see
their appetites are changing, and that's why this is going ENS. So like a lot of right. So
and it's hard to explain that to somebody. They're like, well, the electrical is still modern, right? This building was built in the 1970s, so why would I replace it? I'm like, it is modern, but you're using copper, Romex. But copper is still going to have a lifespan. You can only run electricity through that. The insulators have lifespans. Like, something is going to happen sooner or later. And maybe it doesn't, but the risk is increasing because things wear out over time. And that's what you're seeing in insurance. You're seeing insurance companies go, hey, if you don't replace your roof, you're going to go on our scheduled roof replacement. You're not getting a replacement cost value. If you don't completely rehab or remodel this building, it's going to have to go to ENS.
That's right. The only other thing I'm thinking from a risk, and there's probably a lot of things I'm not thinking about. I mean, there's all kinds of new fangled products out there for like geopolitical risk, things like that. But the other maybe big one that we kind of touched on earlier was just the verdicts. You know, the $1 million isn't what it used to be, number one. So I think a lot of people, we write a lot of homeowners, personal lines umbrellas, and the minimum limits required now aren't 100,000 anymore. Like it's in some states it's 500,000, right? Especially if there's an auto. And so number one, the value of the dollar is lower. So that means, if you have $1 million umbrella, it's not going to go as far, right? And then on top of that, if there's an accident where there is that sad story like we talked about, a family of 4 gets run over by a semi truck or whatever, now these verdicts are getting ginormous, and that's from a risk standpoint maybe related to where pricing is going or appetite is going and availability of product. I think that we're going to continue to see that. So
yeah, it's definitely, the world is changing. We have climate change. Whatever you think is causing the wildfires, I've talked about this before, it doesn't really matter. The fact is they're happening.
They're happening. Yeah.
And Washington used to not be a wildfire state. It is a wildfire state now. Just here recently, we had some binding restrictions from certain carriers because of a wildfire up by Ross Lake. So like those things are changing that haven't been before. We have the inflation, which is affecting both the cost of rebuild, cost of repair, but also affecting liability claims and payouts. And so you just have a lot of pressure. Inflation is pushing on every which way. And those things aren't going to change. There's nothing that's going to change that. So people have to be aware of like, what is my risk as I'm moving forward? The age of my buildings are important. And how I maintenance and manage my risk is going to say a lot to the insurance and affect how much my insurance is going to cost. So like those things are not changing, they're ramping up. And so to be aware of that and just say, okay, as a business owner or even as an individual on my own personal insurance, like I need to be aware of these things so I can manage them and understand what's happening in the insurance industry. So that way when I'm dealing with an insurance agent, he's not the bad guy that's just trying to screw you. They're just trying to help you.
Yeah. And I don't think people see it that way. I think a good agent is able to somehow communicate that I'm trying to help you navigate this, and I'm trying to teach you, show you, educate you, about something you probably aren't thinking about because you aren't, or you don't want to, or you have a negative perception around it. Like, I got to pay this thing so I can get to the next thing. Well, you got to pay this thing so you can get to the next thing, not right. It's not in spite of or whatever. It's because of this thing that you got to take care of. And I'm sure you get this all the time. Like, it's the first thing people think about, right? When they're going to start a business or whatever. If they're planning months out ahead. No, it's like last minute. Like, oh my God, I can't get a contract because I don't have insurance.
Unfortunately, sometimes it's like, I already did this job.
Yeah, exactly.
And now I need to get the insurance so I can get paid. Yeah. Well, Steve, I appreciate you taking time to join me. We're going to do, we always do an after show, so we're going to do that. We're going to talk a little bit more about leadership in business and in insurance, and just talk more personal lines or personal level of things in life. So,
great.
But we appreciate you taking the time to join us.
This has been great.
All right. Thanks, guys, for joining us. If you have questions or comments, feel free to send us an email at theagentinsider@gmail.com. Join us next time as we're going to just have a little bit deeper conversation with Steve. Thanks so much and have a great day.
Thank you.